This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Apple or Spotify. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. We're excited to announce that we'll be partnering up with MicroCapClub for our full slate of investor conferences in 2025. Ian Cassel and his team at MicroCapClub have not only built and fostered the best community of microcap investors, but it's arguably one of the best investing communities, period. We couldn't be more thrilled to leverage our expertise in curating and hosting large-scale microcap conferences and teaming up with MicroCapClub to put together world-class conferences for the microcap community. First up, the Planet MicroCap Showcase Vegas in partnership with MicroCapClub will be held on April 22 through 24, 2025 at the Paris Hotel and Casino in Las Vegas. Registration is now live. Please visit planetmicrocapshowcase.com to register. See you in Vegas. Now, my guest on the show today is Leon, better known as @Mavix_Leon on Twitter X and writer-editor of Underfollowed Stocks newsletter on Substack. As his publication indicates, Leon is all about finding underfollowed investment opportunities with little to no institutional following, a natural fit for our show here. I invited him on to better understand his approach, plus his thoughts on European small microcaps, disassociating from the FOMO, and his thesis on SLYG Group, symbol SLYG. Leon mentioned a number of names during the interview today. For full disclosure, I am not a shareholder in any of them. Thank you again for tuning into the Planet MicroCap Podcast, and please enjoy my conversation with Leon @Mavix_Leon. Leon, thank you for joining me today. How you doing, man?
Hi, thanks for inviting me. It's a pleasure.
Absolutely. It's great to have you on here. And so, for those that might be watching this on YouTube, that we're doing our a patented anonymous style pod today. So I'm going to be referring to Leon as Leon. That's his first name, but also better known as @Mavix_Leon on Twitter X. And, I invited him on here today, to talk about a number of different topics: investing background, philosophy, going to the research process, all sorts of stuff. But I figured let's start there. So Leon, where and when would you say your passion for investing began and got you to where we currently are today?
I think I only realized it later that my first contact with stocks was basically when my older sister had a stock picking game in her school. I think I was about 10 or 11 years old, and I don't understand how stocks works. I just picked a company I knew as a kid or teenager. It was Adidas, because I had football shoes and tricots and so on from them. From the economic side in our newspapers, and I just followed the number behind the company name in the weeks after as the game went. And I just realized that the number behind this increased, and I just knew that this was good for the game and for someone who might be invested, although I didn't knew something about investments. And I think at this point I was already a bit kind of fascinated from this stuff, and I realized kind of early that I was overall interested in economics at all, and I realized soon that I would probably not be a carpenter later, although it would be probably more useful now. But I decided soon to go to a school that had a focus on economics already. Where I learned the first basics regarding accounting, economics, and some basics regarding business administrations. And after that, I started to study tax law. And beside, of course, a big law part in this while studying, I also had a big part regarding accounting principles, because I now have to check in my job that the company's accounting is compliant with the local tax laws here. But before I can check if the accounting is compliant with the tax law, I first have to check if the accounting at all is correct. So that again was a big part in analyzing the accountings, balance sheets, P&L of much smaller companies, not close to being public listed, but yeah, that was definitely helpful for me. And yeah, after that, I started my first job, where I earned my first small money. And yeah, as I was always a bit fascinated from the fact that I could participate from the economical development with stocks without the need to start my own business, and just having a few bucks left for investments, I could participate this and also diversify with ETFs, for example. That's why I first started with ETFs, but I soon realized that I also wanted to invest in some individual stocks, because that was also always interesting for me. But I also, or in Germany, it is often often here that people say this is a lot of risk. There's a lot of risk involved in investing in individual companies, not diversifying. So my idea was that I would also diversify a little bit my individual stock investing, that I have a bucket with less riskier stocks and a bucket with more riskier stocks. What I thought about risk back then. The less riskier part was just buying the mega caps that I knew. So back then it has been Amazon, Google, Facebook, Meta, not invested yet anymore. But yeah, that was just for me. I thought that is not that much risk involved, just because I know that products, I use them every day, and just by the fact that they are large companies and everybody knows them. On the other side, I always was fascinated by the fact that there could a stock multiply by a lot, being a 10-bagger and so on. And I also understood that by the law of large numbers, that the probability in achieving these multi-baggers, there is a higher probability when you buy a small company that can grow much bigger. And yeah, then I realized when looking at these much smaller companies that there is a lot less prepared information from analysts, even when there are analysts or there aren't a lot of articles and so on. Couldn't find them on some sites. And then I realized that I have to do this work by myself. And at this point, it was definitely helpful that I already learned some basics regarding accounting and business analysis and so on. But I never learned a lot about valuation itself, so that was never part of my studying. So this was a big part that I had to learn, reading books, testing, a lot about how to value a company. So I learned more about this kind of investing, did more work on this, and by doing so, I more and more understood that this isn't necessarily more riskier compared to blindly investing in large caps, because at the large caps, I never looked at what multiple they are trading. I never looked at their financials and so on. While at the smaller microcap companies, I did this work. And then I understood that it is much more easier to get a full understanding of a company in this small space, because sometimes in the microcap space, the business model of a company is just they have one product and they are selling it to the customer. So that's it. While for the large caps, they have hundreds of subsidiaries and multiple segments with completely different business models. For me, as a small private investor, I wouldn't be able to really evaluate this. While in the smaller space, I can really do this. I can really have a deep understanding of a company when I do this work for me. And yeah, at this point, I realized this isn't necessarily riskier, but there's still, for me, a bigger upside when I do this work. And yeah, that was mainly the point how I now ended mainly in microcaps, and that probably the reason why I'm today at the MicroCap Club.
Nice, good stuff, man. And just to clear out, are you full-time investor now, or do you still do some?
No, still private, and still do my job at auditing firms regarding tax laws, and yeah, doing this as a side hustle, I would say.
Well, I mean, why not use some of that professional experience on the side hustle, right? I mean, if you're looking at financial statements all day, every day, I'm sure it makes this process much easier than.
It's helpful, but again, it's at a much smaller space. But accounting is the same for a very small company compared to a very large company. As the basics, at least.
Oh, 100%. So, how would you describe your philosophy now? I mean, is it more value, growthy, GARPy? You know, which acronym should we use to best describe your your investing philosophy at this point in your career?
Yeah, I think it's not that easy for me to put it just into growth or just put it into value.
Sure.
Maybe I prefer definitely growing companies, so it's some kind of growth, but I also prefer profitable companies. So it's not these high growth, unprofitable companies that we see a lot. So it's more like medium growth and profitable at a good price. So it's more like maybe GARP investing, but also qualitative factors that I have. It should be underfollowed, that not everyone knows it already, which is often the case in the microcap space. But even in this space, I prefer when not everyone is talking already about it. And yeah, it should always at least have the multi-bagger potential. It doesn't necessarily work every time, of course, but the potential should be there, I think.
Very good. I mean, would you say your philosophy? I mean, not necessarily philosophy, but I mean, you have this newsletter as well that you put out there called Underfollowed Stocks. I mean, when you're looking at a potential idea, that's a quote unquote ideal investment, what would you say best defines that ideal investment or underfollowed stock that, you're like, all right, I'm going to take a deeper dive here?
Yeah. So the ideal investment is of course a small company that can become a big one. So just maybe to give an example how this setup maybe could look like for me. So I really love these small hidden champion. Sometimes they are world leading companies in an emerging niche. That's why they still at a very small scale. But this niche they are very good in is growing. There is some underlying growth trend, and they can grow with it. They are market leader. They're the best company in this small niche, and often customers are among the biggest companies in the world. So this small company has, I don't know, a big part of the Fortune 500 as companies, as customers, and that's something I like. That's often the case when they already have some kind of competitive advantages. That's of course necessary. Otherwise, the big companies could always decide, well, let's just do it by myself. But sometimes it's not really useful for these big companies to do it by themselves. So sometimes it's also for the big companies useful to outsource some things to other companies. So, but there should be some kind of competitive advantages in their product or what they do. Then, as I said, I definitely prefer profitable companies, growing medium growth, let's say 20%, but for a long time frame. So that the company has a long addressable market that they could grow like 20% for the next 3, 4, 5, 6, 7 years. I prefer when it's a healthy company with healthy margins, a sound balance sheet, that is no need for at least big dilution for me as a shareholder. That's also an important point. Yeah, as you said, I prefer when the company is underfollowed, that no one is talking about it. And I also like companies that are more in unloved but developed countries. And these two things together, it's still underfollowed and maybe based in an unloved country. This often already results in a lower valuation, although the business has a very high quality, big customers, growing, sound balance sheet, and so on. But the valuation is still low just because it is underfollowed and maybe in an unloved country. So that's the setup I like. Then, of course, the typical things that the management should be good, capable, that they have shown maybe that they were capable to grow with the business and that they are aligned with the shareholder interests. And then one point that is for me interesting, especially as a private investor, that the business is interesting for me. So I have to be a little bit fascinated about the product or the business model, that I directly have the feeling, okay, I want to know everything about this company. So that's for me personally important, because ideally I will have to follow this company for many years. So if my thesis is intact, I want to be a long-term shareholder, but this in the end means that I have to read every quarter a lot of filings about the company. I will read all the news I can find about the company during the year. I will read transcript calls and so on. And this is a lot of time I will have to spend for me as a hobby, as a private investor. It shouldn't feel like work. And it doesn't feel like work when I really have some passion in this, or I like the business itself, that I'm interested in this. So that's a point that's just for me personally important, I would say.
No, I think that's a point that actually gets overlooked sometimes, especially we've been doing this for a while. And I try not to paint with a broad brush anybody who's listening or who, when I say that, because I mean, at the end of the day, that it makes a lot of sense that you're an ideal investment, both specifically for you. And I think for the vast majority of folks that listen to Planet MicroCap, is that this is something that I want to know everything about. It's not just I want to do a couple channel checks and I did it once over. Like I actually, it's not that I just want to own the business or rather than do a quick trade, but I actually truly want to know everything about this company because it's fascinating to me. I mean, it doesn't make sense for anybody to want to be that invested or wanting to put that much work and time and effort into something, and they only want to maybe find out 25% or 50% when all the information that's publicly available is there, right?
Yeah, I know. So if the only goal you have is just making money, I think that's mostly not the best thing you should always think about. It's sometimes just, I want to know it.
The best investors I know in MicroCap, you would have no idea how successful they are because they are just so focused on the love of the game that it's that you'd be like, what, you're that successful, and you're just like, wait, what are you're living like this? Like, I don't, this is just a result of my love for the game versus wanting to get there. Obviously money, you need that to live, but I just love the game, right? So this segues to, I figured we might as well do a case study, right? I mean, you've been very public about one idea in particular. I mean, you're probably about a few ideas, but one in particular, I guess we're recording this on Tuesday, November 5th. So it's kind of top of mind, is a SLYG group. SLYG is the symbol. I always forget what, Frankfurt, right? Or
Frankfurt and Bulgaria also.
And Bulgaria, that's right. They presented at our conference last year in Vegas, and they're actually going to be presenting again this year. So figured maybe using them as a case study, what about SLYG Group how did you find it? Let's talk about your research process in there, how you found it, how did it evolve into something that from just an idea to, I want to know everything about this business. And then love to know your thesis on it. So the floor is yours.
Yeah, so how I found this company, this business, was and this is also where I found a lot of ideas still, is thanks to my socials. I found it on X, thanks to Mark Schaugratzky. I don't know, you probably know him. He pitched the idea, and I would say still on socials, if you follow the right persons, this is still a very, very powerful tool to find ideas. If you find trustworthy, good persons that are like-minded, that are searching for the same stuff. And yeah, that's how I found Shelly. And I think I read from Mark about it, and then realized that a friend of me was installing some Shellys at his house. So when I realized that it's about smart home automation, I was already hooked, and I wanted to know much more about this. And especially when I realized that this is a cheap solution, because I heard from others, friends and so on, that a smart home solution is pretty expensive, especially here in Germany, but that Shelly, they were initially very successful in Germany, and that they are also good in retrofits from houses. So when you have an older house that is not smart, you can use their products very easily at a cheap price to make your home smart. And I think that this was a very, very good perspective for the company. Then I had a look at their financials. They had really, really good margins. You would imagine from just a basic consumer electronics hardware company, well, maybe low single digit margin profile, but nope, not here. They had always good EBIT margins, healthy margins, a very healthy balance sheet, a management team that recently was renewed. When I first looked at the company, they always had a CEO that was more on the technical side. Then a new CEO came or was added that was more the business mind behind it, and he took them on a completely new level. And they also did more put out some more information about the company for investors. They put out a big guidance where first was, oh my God, I don't think that this is the right company, because this guidance was really, really ambitious. And but I did more work on it and realized that this could really be a special company. And the valuation was at a very low point. And there's also a point that I previously said. One point of this is that it was or is based in Bulgaria, an unloved company for, I think, most investors. They don't even look at this because they don't trust these companies. But when you're talking to management and also looking at the financials, you can build up some kind of trust even when they are active in these countries. And I knew that these are real products from just seeing it. And yeah, that's where I was really, really hooked. And they had a lot of growth potential already back then, growing into more. So they started in the do-it-yourself business, but the bigger market is the professional smart home market. So they had this growth point, but also they were mainly active in the DACH region, which is Germany, Austria, and Swiss. They had this big European international expansion possibilities and much, much more. So they had this really long growth runway that I want to see. And yeah, they had some kind of competitive advantage because they are doing their R&D in Bulgaria, which is, from a European perspective, a very cheap country from a labor point. So this R&D work is, they can do much cheaper, develop new products better, faster even, or maybe compared to a competitor in Sweden that has to pay much higher labor costs. But on the other side, they are still a European company with some compliance things and so on, and cloud solution from Europe. So this is their advantage against the much cheaper competitors from China. So they had this good sweet spot with a cheap price compared to European expensive, much more expensive solutions. But on the other side, this competitive advantage regarding China, that people don't really want Chinese products with their house data in the cloud. So this company directly ticked so many boxes of my investment checklist, that I was directly hooked. And today was Capital Markets Day, and they still, I think I can have a look when was the first investment of me. October 2022. So I back then I thought, oh my God, what is this? What is this for crazy guidance? And today I say, well, okay, they will easily achieve it. And today they presented how many growth runways they still see until 2030. And I think, yes, definitely.
It's so funny. I remember seeing their presentation for the first time at the MicroCapClub Leadership Summit. What was that? It was last year, I think. Yeah, wait. I can't remember exactly. Maybe it was 2022, actually. Or no, it had to have been last year. And I remember having the same reaction when I first saw those that presentation slide of their I don't know if I'd say guidance. It was more their goals for 5 years, right? Their 5-year, 10-year revenue goal, where they want to be. And I think everybody in the audience had a gather. Wow, that's ambitious, and it's always nice when you have a CEO that walks the walk.
Yeah, and I mean, when I saw this initial guidance was, I don't know, I think it was in the first place mid 2022, and this was after a time when these high growing companies that were putting out really ambitious guidances were falling down, and they never told about the guidance again, and then this company came up. Well, okay, we have a new guidance, and everyone was, oh no.
Oh man, it's pretty funny. But I appreciate, look, kind of you definitely, it's funny. You think about both sides. It's like you appreciate on one hand when they give that and then they execute, but at the same time, you almost should appreciate when they give that and then also like, okay, now I have something to hold them to a standard. And if they don't execute, then it was all right. We can assess why they didn't execute, but at the end of the day, it didn't happen.
No.
So it's interesting. We always like to talk about the difference between guidance and also setting goals. Where you have your set guidance, it always sounds like a more short-term thing that they're trying to reach versus the goals where when I talk to most companies, like I try and ask them that, what's that 3 to 5 year goal versus, what's your 1 year revenue guidance, because you never know what's going to happen on a year-to-year basis. But if you're looking 3 to 5 out and this is where you're trying to be, then you have something, especially most of these guys, they're so small that, they can be very negatively affected by some short-term headwind that they had no idea that was coming, right?
Yeah, of course. No one knows what happens in 3-4 years. So
absolutely. All right. So real quick, for compliance purposes, I mean, it's pretty clear that you're a shareholder, but just so that we can get it on, say you are a shareholder of Shelly.
I am a shareholder, yes.
Okay, very good. And full disclosure, I'm not a shareholder of Shelly. So wanted to move to another topic to talk to you about today. We haven't had too many European-based investors on here that look at small microcaps. We should have more. I'm trying actively to have more, or just maybe convince some people to move over to Europe so I can say, oh, it's a European-based investor. But from your perspective, I think you probably have out there that you're based in Germany. What have you been finding when you're doing your due diligence and just going through all the different ideas that are out there? Have you been finding more or less unloved or underfollowed small microcaps that are, either European listed or based in Europe?
Yeah, I do find more of them in Europe. I think they are multiple reasons why I find more of this setup that I like in Europe, maybe compared to the US. Well, one obvious aspect is maybe that they are more underfollowed stocks, just because the US market is the biggest financial place in the world. It has probably the highest liquidity in the world. Most investors are just looking at US stocks. It's the same with large caps and small caps. Most investors, or a lot of investors, are just looking at the large caps. So you will probably find more underfollowed stocks in the microcap space, and that's the same game between Europe and the US. And as I said, I don't want to invest where the crowd is. That's why I often end in Europe or other countries that are also criminally underfollowed, maybe sometimes Japan. But yeah. And then there's another aspect I also already touched a little bit, is the valuation part. That companies in these unloved companies, and most European companies are at least currently unloved, that they have just a smaller value, a lower valuation. One can say, well, it's deserved just because it's not the best financial marketplace. There are a lot of regulations and so on, but at least you have maybe this potential upside. So if it's not deserved, you still have this upside for European companies. While when I invest a similar stock, but at a much higher valuation in the US, I just see the potential downside. I don't see a potential upside from this already maybe elevated valuation. So this is one point. And then another one is that I want to see a profitable company at still a small size.
So in the US, it's much easier for small companies to get venture capital to fund their high growth, and that's why you find a lot of high or fast growing companies, but at the same time they are still unprofitable because they don't have to be, or they don't have to fund their cash flows from their operations. And in the US, you can grow even faster at the beginning because you have this huge country. You can expand into with the same company. Not a lot of barriers, I think, and you can reach a certain scale much faster. Compared to that, in the European Union, you have a lot of different countries, different languages, which is still a big barrier someone wouldn't consider today, but just from going from Germany to France is sometimes a big issue. So you have different regulations from country to country. So expanding on the bigger scale from the European Union is much more complicated, and often it takes much more time. And in Europe, there's not that much VC money available for these unprofitable small companies. So they must be profitable at an early stage to fund their own growth. And at the same time, as I said, due to these all kind of regulations, it's not that easy to grow that fast as you maybe can in the US. So this is exactly the setup I want to see, this profitable small companies growing at a medium size. And these three things combined, underfollowed, the valuation point and profitability at a small size, these are mainly, I think, the facts why I mostly find ideas just from Europe.
Very good. All right, so we're going to close it out with kind of a two-parter here. What would you say is an investing experience that really changed your career or set you on the path that you're on the most? And what would you say are maybe some of the learning lessons or advice that you have for new investors from some of the maybe the landmines that you had to experience along the way?
Yeah, so I started investing in 2015, so I wouldn't consider myself as a really experienced investor. Still a young investor who's probably making a lot of mistakes in the coming years. But one of the things I learned, especially during the rally of unprofitable high growth companies in 2021 and 2022 with SPACs and so on, this was, I would say, quite formative for me and my style, because as I said, my strategy is and was mainly focused on profitable companies since I started. But in 2020 and 2021, I got distracted from all these successful investors in high growth, unprofitable companies, seeing all these great returns on social media. So that's definitely the negative side from social media. You can find a lot of good investment ideas, but also a lot of bad investment ideas that don't really fit to you, just with high returns from small time, but not long term. So at that time, I said, well, I think I would just give it a try with these unprofitable companies with a small amount of money, because I'm still a young investor and I'm not fixed with my style yet. So I still can learn more about this, and maybe it fits to me. So let's give it a try. With a small amount of my portfolio, I thought that's okay. Well, and as everything in 2021, it worked very well. I chose a company, was fast growing, was interesting, great prospects, and so on. And well, fantastic return directly, as everything in 2021. And I picked another one. Oh, also great return. Everything went up. Then this kind of FOMO feeling was added when I saw a new pitch on social media or everywhere else. It was not unusual that this pick directly went up 50% in the next few days, just by presenting it on social media or something. And that was a point where I made less research on the companies, because I didn't want to miss this return in the next days. I had the fear, well, I will miss everything. So the classic FOMO feeling, I think or a lot of investors know. And as everyone also knows, in 2022, the bubble popped, everything went down. And that was the point when I realized, okay, this share of unprofitable companies became higher than I initially wanted. And I also realized that in this downturn, I wasn't really able to value these unprofitable companies, because I didn't made the work I had to before, and I also wasn't experienced in valuing unprofitable companies. So I wasn't, or I didn't feel comfortable owning these companies in the downturn, because I couldn't value them correctly to decide could I buy more, or should I better sell. Well, on the other side, with the profitable companies, they also went down, and this time also profitable small companies went down. I was totally fine with it, because I was able to value them. I did the work before, and I could objectively decide whether I should buy maybe more, or just hold, or should sell because something has changed, like that. And yeah, I learned that I feel much more comfortable with these profitable companies, and that this fear of missing out has led me to make bad decisions. And it is always important to learn from mistakes and maybe change something to improve your strategy. So that's why I now focus on profitable and financially healthy companies. But I also kind of developed a small framework for me that should work against these FOMO feelings for me. So that's why when I now read a pitch or a write-up on, let's say, Substack, I give it a read. And if it fits my basic criteria and looks interesting and so on, I don't have a closer look after this. Because when I read this write-up or analysis or pitch, mostly it's written in a positive way. And if I directly start after reading this positively written write-up with the financials, I always have this still in mind that, oh, this is a good idea. Then I see maybe a negative point. That maybe that's that interesting. Maybe I start a small position. So this is always in my mind that another one thinks this is a good idea. Kind of this FOMO feeling. So that's why I never invest now directly after reading a write-up or start even the deeper research. I just put the company name on a list that I have on my phone, company name or just the ticker, but nothing more. Nothing where I found it or something else. And then when I have some free time, the weekends, and sometimes I don't feel it, so sometimes I don't have that much time to take a look at this list. So I don't know, maybe when I would look now at the top of the list, then the name I wrote down there was 3 months ago, and I don't know where I found this name. So these positive things that I had in my mind are not there anymore. And then I start from scratch with my analysis, with my deep dive. I then first have again a look at the numbers. Does it still fit my basic criteria? And if yes, then I go to the company side, look at the financials, the filings, and so on, but in a more objective way. And that's how I try to avoid these FOMO feelings. And yeah, that's basically what I learned from this.
I think that's really cool advice. That's a very interesting way to do it. Probably much easier in practice when you have your full-time day job. So, okay, I know I have things that can distract me from having to just immediately go and look up everything I possibly can after reading, potentially a good pitch or something that was interesting, especially if you're a full-time investor. But I think that's a really cool way of thinking about it, or at least trying. I mean, maybe for some, it's a week, right? You put it on your list.
Yep.
And, just kind of, I like the phrase disassociating from FOMO. I'm putting that, adding that to the title. Well, I mean, Leon, we covered so much today. I think, you really did a great job, and I'm sure we'll have you back on at some point. So, where can folks go and follow you on social as well as subscribe to your newsletter?
Yeah, as I said, I also do write-ups about underfollowed stocks on my Substack that is called Underfollowed Stocks. There you can find company deep dives of these underfollowed and interesting stocks, some basic things about my investment strategy, my portfolio updates, earnings reviews, and so on. And as you already said on Twitter or X with Mavics_Leon, there are also post mainly company news on the companies or stocks that I own. Yeah, that's mostly it.
Beautiful. All right. Well, with that, Leon, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe, and look forward to our next update.
Was fun. Thanks.
Thank you.